Hey there, everyone. How are you doing today? As mentioned in the daily financial news, we have the lovely and awesome Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael.
Awesome, man. Hey, one of the questions I get so often, because again, I'm kind of the single family, buy and hold rental guy, is, hey, somebody says, hey, I'm excited. I want to get in. I want a few rentals. I've been watching what you do, one rental at a time, all of that, but I have no cash. However, I have a home where I'll just say I have $100,000 equity line that I could use. So I thought I would ask you, what do you think about using an equity line and your primary residence to get started? When you hear things like that, do you just hear risk? Do you want a plan? What are your thoughts when you hear somebody wants to use equity in their home to get started?
It can be a great idea, especially right now with the way, with where rates are, it's so low. But what I would say is, use a line of credit, not a home equity line. Those are two different things. So you don't want to go take the equity out of your house in a lump sum because the interest clock is clicking.
Mhm.
And once you pay it back, it's done. So what you want is you want a revolving line of credit, revolving equity line of credit on your house. So it's based on the equity you have. You can borrow a little bit more sometimes, and then you can use it, pay it back, use it, pay it back. And the interest clock is not ticking until you deploy the cash. So number one, that would be how I would recommend using the equity in your house. And then you can use that for down payments on residential, rental properties if you need to. What I would really say is educate yourself so that you know how to get into these without even having to use your own money, because there are ways to do it without having to use your own money. You can get seller financing, you can do, rent to owns. There's a lot of different ways to do it. But at the end of the day, if you have a good income, you can borrow money. Just take that, use it as a down payment. As soon as you get that property up and running, hopefully you can find something you can add value to. You refinance the rental property, pull the equity back out, and then keep redeploying or pay your equity line back till the next deal comes. So I think it's a great way to do it. Especially, but the key is you got to make sure you can build equity, build value in what you're buying, and make sure that you have a spread between the cash flow you're bringing in and what the cost of capital is on that down payment and what you're paying the bank, so that you have a positive cash flow there.
I'm so glad we see it the same way, because sometimes I ask these questions and I have no idea where they're going to go. A couple of things what I took from your outline that I totally agree with. One is you can absolutely totally use a line of credit, right? The revolving, where you can use it, pay it off, use it, pay it off. Totally agree. Don't just take a second and have the money clicking in your savings account or whatnot. So that's number one. Number two is I love the idea of paying it back. I don't like, some people are like, use every available dollar you can, maximum leverage, maximum leverage. I hate that. I think that is recipe for bad things to happen if the market turns. So I personally love the idea. Hey, if you're going to use your equity line or use equity in your home, I want to see a plan to pay it back. Right? As you say, right, buy at a discount, refi out, pay it back. And I actually like to put a clock on it. I would prefer someone to do that and have a plan to pay it back in 12 months or less. I'll take 2 years, but yeah, I don't say, hey, I got 100 grand. I'm going to go buy 3 rentals, use it all. I'm going to get the cash flow from here to make the payment. I just saw too many people lose too many properties in the '08 crash to think that's a good idea.
Yeah, yeah. And that's the difference between a HELOC, for anybody listening, a HELOC, home equity line of credit, that's a revolving line of credit,
Mhm.
and a HELO, home equity loan. So what happens is when people take out home equity loans, they generally don't pay them back, because that money's deployed, it's out
Yep.
there, and they just kind of leave it out there. But with the line of credit, it kind of incentivizes you more to kind of pay it back, because you can use it, deploy it, use it, deploy it. And you can use it to flip, which is your
Mhm.
chunker strategy, go buy, renovate, sell, and compound that investment, and then build your own nest egg.
Mhm.
That way you can use it for the buy and rent, refinance, repeat strategy, the burr strategy.
Mhm.
So there's a lot of different ways you can use that home equity line, but one of the best ways is to use that to flip and build your cash reserves, and then invest those into long-term properties that you can hang on to for cash flow, if that's what you want to do.
No, I think that's absolutely right. I mean, I think it's tough to, go buy a what do they call them? A turnkey rental, in
Hmm.
some other market that you're paying probably near or at market, and then pay it back, right? Pay back the equity line, right? Let's just use 100 grand, right? You're going to take 25 grand, you're going to buy the house, and it's going to cash, maybe the house cash flows 300, but your home equity line of credit payment's a buck 25.
Hmm.
It's hard to pay that off, right? Because there's no value creation. So yeah,
Yeah.
I think you're right. I think that's something I need to be clearer about when I get asked this is if you're going to use your home equity line, you've really got to use a strategy where you can find and create value, whether it's the burr strategy or flip strategy to create chunks of money to build your base, right? You make
Yeah.
20.
And then, number three, you can use it like I did starting out to fund and or grow your business. So I
There you
used a
go.
home equity line of credit early on in my career. It was only 20 grand, but it was something.
Mhm.
And I used that to, for working capital to grow my business. So as I needed more tools, float payroll for a week, whatever it was, I was using that revolving line of credit to kind of scale the business.
And how long did you use that? Did you find yourself having to use that for 2, 3, 4 years? I mean, or was it like in a year or two, the business was self-funding?
Yeah, it's pretty much the first year,
Okay.
just getting started.
Yeah.
And then once that business reached critical mass, I paid it back, never touched it again, and just grew
Yes.
using the business capital.
That's where I was hoping we would go, right? If you're going to use it to fund a business, you're going to use it for flipping or the burst strategy. My hope for you is at some point that home equity line of credit is you don't touch anymore, right? You've proven the model, you've built chunks of cash. Use that. Don't keep putting where your kids and your wife or your husband sleep at night at risk. I think there's got to be a time when you just don't use it anymore.
Yeah, I mean, if you're in a house, and a lot of people will disagree with this philosophy, but if you're going to stay somewhere long term,
Mhm.
permanently,
Mhm.
then your goal should be to just pay cash for that, so it's done, over with. You put it in a trust, nobody can take it, nothing could ever happen to it, because we don't know where the economy's going.
Yeah.
And it's like you said, you need somewhere to sleep at night. Now, a lot of people would say, well, with the cost of money right now, and inflation and all that, you're actually better off deploying that capital and using it, and paying that cheap mortgage because it's almost free, because you can make a lot more money. Let's say it's a $500,000 house, you can make a lot more money, deploying that than you can leaving it in your house. But and at the end of the day, you could go rent. So if something happened, your house got taken, whatever, you can go rent something somewhere, right? So so there's arguments to either side of that, but at the end of the day, for a lot of people, it's a nice thing to know that they have their house paid for and they don't have to worry about that, and it's not going anywhere.
Yeah, well, I'll come out and I'll say kind of both sides are right, but when they're having this argument or discussion, I really see 2 points of your career, right? If you're in what I call building the foundation of your business, right, or your rental portfolio or whatever, your job's to build, and that means have debt, and probably
Yeah.
have debt on your primary. But as you get closer to the end, I could tell you when I was 6 months, maybe 3 months out for being done with my W-2 job, I had debt on everything, right? That was the goal, right? I keep building, going forward. But as I got to the end, I have several things now that are free and clear, including the house. So,
Yeah, yeah. And that's what we're talking about. Mainly your personal assets. You want to
mhm,
be kind of debt free, cars, house, that kind of thing.
yeah,
If you're exiting a W-2 career type thing and your income's been capped,
yep,
throughout your career. Now, if you're an investor, developer, whatever, you want all the leverage you can get, in your investment properties.
mhm,
So, the more you owe, the better position you're in. And that was proven to be true 2008 and 9. The
mhm,
more you owed the banks, the more willing they were to work with
yeah,
you. The less they, and your personal assets needed to be protected,
yep,
so that if the chips fall, in a negative way, they don't come after all your assets. So, there's some advantages there. So it all depends on where you're at in terms of, your abilities to produce, your investment acumen, and, where you are in your life and the stage of life and those types of things. And generally, the younger you are, the more risk you can take, the more leverage you're going to want to deploy, because, you can always start over and do it again. The older you get, for a lot of people, the harder that becomes. But you hear the stories over and over and over of people that, didn't start and really hit their home runs until their 60s, like
mhm,
Colonel Sanders and
yeah.
people like that.
Very cool. So yeah, again, folks, I'll just say it. I generally don't like the idea of putting your house where your kids, your wife, your husband sleep at night at risk. However, in the beginning, if you're willing to start there and you have a plan to pay it back, i.e., create equity flipping, chunky money business, uh, go for it. But do have a plan. Definitely have a plan. So, Greg, how can people find you? See what's going on in your world?
Yeah, man. GregDickerson.com. That's my website. All my YouTube, social media, everything's on there. And I put out videos every day. And one of the things I've been talking about lately is cryptocurrency. That's becoming more and more popular. A lot of people are jumping in that game. For anybody watching this, there's a ton of scams out there. I'm going to make a video later today about some of the cryptocurrency scams. One of
Nice.
them is people posting in the comments. You've probably seen it,
Oh,
where they say Bitcoin is the greatest thing. Just contact Mr. Jones or Miss
yeah,
whoever, and they have this WhatsApp number.
yeah.
Those are scams. They're trying to suck you in to get you to send them money for you to invest in cryptocurrency. So a lot of scams out there. Be careful, educate yourself, know what you're doing. You can make some money. It's an interesting space. It's a fast space, but you can lose everything in seconds. So
seconds. Yes.
Be careful.
Be careful. And folks, just so you know, I paid somebody to change up my descriptions here recently in all my videos. And one of the links below is Mr. Greg Dickerson's playlist on my channel. There's over 100 hours of us having discussions. Go check it out. Thanks, buddy.
Wow. 100 hours.